Hello and welcome to another episode of Ezoic Explains. I'm Whitney Wright, and today I'm going to be talking about why ad rates are currently so high. Back in April, the economy and ad rates saw major declines due to the coronavirus. Since then, ad rates have been climbing back up. Whereas Q3 is usually one of the slower months for ad rates in the US were 20 points higher than usual summer rates. Now, US ad rates are matching that of Q4 holiday season rates months before Black Friday. Why is this? If we look at the stock market, we can see that Ezoic's ad revenue index follows the same pattern. The economy is slowly recovering from the decline in spring, and if you compare the two rates side by side, you can see that when the Nasdaq is down, the ad revenue index is down, and when it begins climbing once more, the ad revenue index does as well. Even when there were slight dips, they still followed the same pattern. This is because ad rates follow the economy. If the economy is growing, so are ad rates. Additionally, advertisers will put their money where they put their hopes, and if they're hoping for a large uptick in holiday spending as the economy recovers, they're going to try and get ahead of that. Also, e-commerce has been thriving despite the pandemic. Currently, e-commerce makes up about 20% of retail, excluding oil and gas. According to a report by eMarketer, US commerce sales is actually expected to grow 32.4% year over year, in many ways due to the major decline in brick and mortar retail by consumers. Many shops had to move online to compensate for the lack of in-store purchases. The growth of e-commerce means the growth of ads in this space, with advertisers competing with one another to get this ad space. E-commerce has also seen growth because people are spending more. Many employed people are financially stable, there was the stimulus to those who were unemployed, and the self-employed saw record debt paid off and record investment. Much of this extra money was reallocated to more spending, which is mostly being done online during this time. In addition to e-commerce, digital spending in general is up. Most of advertising is moving their budgets to digital. In an article by Search Engine Land, it is projected that though overall US ad spending will be down 8% this year, digital ad spend will increase by 6%. It is projected by the IAB that some traditional channels are down by at least 30%. It is also evident that many retailers are already doing their holiday marketing, as we have seen holiday-like ad rates since September. Many brands are trying to play catch up in the digital ad space since digital ad spend took a downward turn in Q2. Now, retailers are ready to start the holiday season early. Lastly, this is an election year. More money is being spent on political ads than any other years. In May, spending on political ads outpaced the last presidential election year by $1 billion. It is predicted that candidates will spend up to nearly $3 billion more on political advertising than the previous election. You do have outliers like Michael Bloomberg dropping $1 billion on advertising just on his own in 4 months before dropping out of the race, but that means there will still be $2 billion more spent this year in ad campaigns than the last election. Not only are campaigns spending more, they're starting to spend earlier. Once the race was down to 2 people, viewers started seeing ad campaigns at a rate that isn't usually seen until Labor Day. And that's it for this episode of Ezoic Explains. Thanks so much for watching. If you liked this video, please subscribe to our channel, subscribe to the playlist, give us that thumbs up. You can find us on LinkedIn, Twitter, Instagram, Facebook at ezoic.com and ezoic.com/blog. This has been another episode of Ezoic Explains.